Okay, I want you guys to imagine this for a second. You just had the best year of your life. You went out on your own, you grinded, you figured it out, and for the first time ever, you crossed six figures working for yourself. You didn't have a boss, there was no ceiling, it was just you and the work. And then you get a bill in the mail or online, $25,000 you owe to the IRS, just completely gone. And the thing is, it's not just the number, it's the feeling that comes with that number. Like, the harder that you work, the more you're going to get penalized for it. If you make money outside of a traditional job, so let's say freelance, consulting, videos, side hustle, whatever, what I'm going to tell you guys about is probably going to be one of the most valuable things you'll learn because there's a completely legal way to keep tens of thousands of dollars that would otherwise go straight to the IRS. And nobody's talking about it. Here's the thing that most freelancers don't realize, right? They're not doing anything wrong. They're not ignoring their taxes or hiding money anywhere, nothing like that. They're doing exactly what they think they're supposed to. They just have the wrong playbook is the thing. When you work a traditional job, right, your employer handles a lot of the tax structure for you because it's built in. But the moment that you go independent, the moment that you start getting paid directly for your skills, you step into a completely different tax environment. And most people don't even realize that until they get their tax bill. When you're self-employed, you get hit with self-employment tax on top of federal income tax. So you're essentially paying both the employee and the employer portion of Social Security and Medicare. So you're literally paying for both sides because there's no company splitting it with you. You're making more money than you ever have, and somehow you're literally keeping less of it. The thing is, the internet, right, teaches you or teaches us how to get clients and whatnot, how to make money, stuff like that. But nobody ever teaches you how to keep what the clients are paying you. The first instinct most people have is, I'll just earn more, right? If taxes are taking 30%, you have to make enough that 70% still feels like a win. But that is a treadmill. You're going to run faster and the taxes just scale up with you. So instead of trying to out earn the problem, start asking a different question. How do wealthy people, self-employed people actually, protect their income? There's no offshore accounts, no some shady, real estate scheme, nothing like that. No team of lawyers or Swiss bank account, no Jordan Belfort kind of stuff. Literally just a retirement account, a very specific one, actually, one that was designed by the IRS, ironically, specifically for people who work for themselves. And it's called the Solo 401k. And once you understand how that works, it literally feels like someone's been hiding a cheat code in plain sight. Here's where it gets interesting because this is the part that feels almost unfair once you see it. If you work at a regular company, there's a hard cap on how much you can contribute to a 401k each year. Right now, that limit's around 23,000. That's about it. That's a ceiling. But if you're self-employed, the IRS does something unusual. It actually views you as two separate people. So you're the employee and you're also the employer. And that distinction is what changes pretty much everything. As the employee, you can contribute up to 23,000, same thing as anyone else, right? As the employer, however, you can also contribute up to 25% of your net self-employment income into that same account. So if you add those two together, the total annual contribution limit jumps to $70,000 or more depending on your income, how much you're making. And that's not a typo. It's not some loophole that someone, snuck past the government. It's a legitimate retirement vehicle that was specifically built for self-employed people. And most freelancers, content creators have never even heard of it. But the thing is, let's put some real numbers to this because this is where it clicks, right? Say you bring in $100,000 from your freelance work this year. Without any strategy, you're paying taxes on that entire $100,000, federal income tax, self-employment tax, the entire thing. Now, you open a solo 401k and put in $20,000. That $20,000 gets deducted directly from your taxable income. So the IRS now sees $80,000 instead of $100,000. That single move drops you into a lower tax bracket and literally saves you thousands of dollars immediately. And here's the part that most people miss. You didn't lose 20,000. You didn't spend it. You moved it from a tax bill that disappears into nothing into an investment account in your own name, growing in the S&P 500, compounding for the next 30 years or however long. You didn't sacrifice any money. You just redirected it. You literally gave the IRS, or the IRS gave you a tax break, and you use it to build wealth. So I want you guys to sit with something for a second. If you're putting in 60, 70, 80 hours a week, building something for yourself, a client base, a channel, a freelance business, anything, and you don't have a tax strategy, you're working those extra hours for the IRS, not for yourself, not for your future, for them. And the crazy part is, you don't need to be running some massive operation to use this. Solo 401ks are available to freelance writers, designers, consultants, coaches, creators. If you have self-employment income and no full-time employees, you qualify. That's it. That's the bar. So the tool exists and the rules allow it. And the only thing standing between you and using it is the decision to set it up. So if you're building something on the side or full-time, drop it in the comments. Let me know what you guys are working on. I read all the comments, so yeah, I genuinely want to know what you guys are up to. But if this opened your eyes a little bit, subscribe. This kind of stuff, I dig into every week, and all real strategies, no fluff, no, fake guru energy, whatever, people call it nowadays. But I'll see you guys in the next one.